Hi folks, welcome to the latest in our Meet the Manager series. Today we're going to be looking at a fund that invests in the UK stock market with a bias towards smaller companies. To join us to talk through that, we have Richard Penny, who is with Legal & General. He runs the Legal & General UK Alpha Fund. Richard has got over 20 years experience in the UK stock market. Previous to Legal & General, he worked at M&G on the Recovery Fund. Richard, thanks very much for joining us.
Thank you.
Maybe if we could start by just, if you could talk through the fund in terms of what you're trying to achieve and just give people an idea of what it tries to do.
Okay. The UK Alpha Trust is a fund invested in UK shares. We have as many as, but not more than 50 holdings in the fund. We try to take big positions in those UK shares where we believe we have high conviction that we can make really good capital gains. So there's no particular focus on income, unlike a lot of other funds, and we're looking for stocks that potentially can double on 3 years. And I've been running the fund since it started in May of 2005, and I'm fairly pleased with the results, where we're pretty much up there with all but 4 or 5 funds out of 300 since it launched. Yeah,
certainly the performance has been very strong. That's quite a busy space, the actively managed funds investing in the UK stock market. Maybe you could just touch on what you think has given you an edge, what you have over your peer group.
I think it's only a minority of funds out there where the fund manager's got a meaningful amount of their own money in the fund, and that is certainly one of the edges that we have. We're always watching the positions like an owner, because I do own the shares. Other areas where I believe we add value is that we are looking for stocks that can double in 3 years. Now that's quite ambitious, and we've got 2 perhaps distinct strategies here. We're looking for growth businesses, so maybe entrepreneurial businesses involved with growth areas of technology or healthcare that sometimes are under 100 million market value. Now, people may not be aware of this, but many funds, even small company funds in the stock market, to some extent prohibited from investing in companies under 100 million, maybe because they're too big, maybe because they have fund guidelines that don't allow them. I think it's a shame not to be able to take part in that entrepreneurship and some of the growth opportunities that are there. So we really look at all of the market cap opportunities that are available. And the other side to the growth and entrepreneurial investments that we buy recovery type distressed situations. And often the very best opportunities are when they fall below a certain level of valuation, even though there might be a lot of tangible value to these holdings. And so I think it's a real advantage that we're able to look at investments that may be 50 or 60 million pounds, which actually certain other managers are actually forced to sell because of some of the guidelines that they have.
Right, okay, well that's very helpful. So although you are not branded as a smaller companies fund per se, that is where you find most of the attractive opportunities.
I think that's fair to say. I mean, if we look at the UK stock market over a long period of time, somebody's calculated this since 1955, small companies, because there are a lot of them, have outperformed the market. And even beyond that, some of that performance, people have calculated that it comes from the big winners from the small cap area. So the big winners are going to be those growth stocks that keep growing, or the recovery stocks that were once big and have come down to be smaller, but then recover again. And even more than that, there is these small companies that have maybe outperformed the main market by 3% per annum since 1955. The bottom 2% of the market, as opposed to the bottom 10%, have outperformed something like another 2% beyond that, so maybe 5% more than the UK market. So if you were choosing just to invest in the UK stock market with a blank sheet of paper, logically for the long term you would invest in small or very small businesses.
Indeed. Right. And then just turning to the stock market itself, we'd just be interested to hear your thoughts on where you think we are now. So we're recording this a day after we've had a very tense situation in Ukraine, and we had a bit of a sell-off yesterday across the globe. So just be interested in your thoughts on the markets generally.
Yeah, I mean, there has been good momentum to the market. It's now in the UK, it's probably just a little bit more expensive than it has been, a bit more expensive than fair value, looking at it historically. But then relative to bonds and other alternatives or putting your money in a bank, shares look quite attractive, and although I don't often invest in very large companies, I mean, one can look at the likes of Shell yielding just a bit over 5% and compare that to what people would get in the bank, and one can see that there is still value in the stock market. So maybe you have to be selective. From my point of view, I've seen a lot of money in 2012 and 2013 going into mid-cap names, into property and house builders and cyclical businesses, where you need a really strong recovery now to make really good upside in those shares. And we're starting to see the money permeate the bottom 1,000 companies in the market that have been really overlooked, maybe for 2 or 3 years now, and that is where I've got the fund positioned.
Okay, fine. And you mentioned earlier that you are personally invested in the fund. Would you really just elaborate on that for the purpose of viewers?
I think it's very important. I mean, if you look at funds, the funds that have done well, and people have done the research on this, are the funds where the manager's got a significant investment. I have some shares in Legal & General, so I can't say that I have no money in the rest of the stock market. But if I see a really good idea, my response is not to go and invest my own money in that personally, leaving the other investments for clients. My approach is to put the money, to put the investment, put the fund money into the best ideas, and to have my own money in the fund. And I've never taken any money out from the fund, and I look to make increased investment through time within the fund. So I'm very much aligned with clients, and more so than that, the idea for the fund in 2005 came from me. I asked to run this fund targeting the deep value recovery names and the strong growth.
Right, and I understand that you are the largest individual investor in the fund.
We believe that to be the case, but yeah, we believe that, yes, I think I am.
Okay, fine. And maybe if we could finish off with you maybe fleshing out a bit more on one particular stock that you like at the moment, you think looks particularly attractive.
I mean, we like growth companies, and we like cheap and deep value companies. Sometimes we get a crossover that can make them particularly attractive. One name that I would draw out of that is Internet Q. It's not a household name, but it is very cheap, and it's growing very strongly. Not only is it growing very strongly now, it's grown very strongly for the last 3 or 4 years. It's done 20 to 30% revenue growth, and its profits and operating profits have grown a similar 20 to 30% per annum. It's now making over 10 million of operating profit. It's involved with mobile marketing, so marketing approaches for mobile phones on a global basis. So it's in Southeast Asia and the Balkans, and to some extent Latin America. And of particular note recently, and over the last couple of years, they've launched a music service which allows you to listen to music on mobile phones in these specific territories, so not the US or Europe. And this is doing very well in the likes of Southeast Asia, Greece, Poland, and I believe that that's going to drive the profits of this business over the next 2 or 3 years. And this is really, really interesting when one looks at the valuation of companies like Spotify, which is private, which is valued at about $3 or $4 billion, and Internet Key makes profits of, as I say, maybe 10 or 12 million historically. That looks like it's going to grow, but the total valuation of that company is less than £200 million. So there's a lot of the attractions within that business that people see in some of these Spotify and Deezer type services, and this business is priced at a discount to the UK market as a whole. Right. So I think this one should be a good one. It's growing nicely at a good valuation.
Great, thanks. Well, thank you very much for your time, Richard. Hopefully that's been of interest to you folks. Anybody who would like further information on the fund, I'd encourage you to contact your broker. We have a note on the fund. It is currently on our buy list. Thank you.